Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for October 3rd, 2021. Hope everyone is having a great weekend so far. Let's take a quick look at how the markets finished off on Friday. We did have a nice strong update on Friday. The Dow was up 482 points. Now, is this the bottom? Are we going to rally from here? Honestly, it's doubtful, but as they say, there's always a chance. Right here, this could end up being a near-term double bottom, right? And we rally. But we've got that downsloping 20 to contend with right now. And unless and until we get above that and break above a high, there's really nothing to get excited about. The path of least resistance is still to the downside. If you look at the S&P 500, we were higher by about 50 points, but we still have lower highs, lower lows, and although yes, we had a positive day on Friday, this just seems like a minor blip in this existing downtrend right now. The Nasdaq 100 up a nice 118 points. And this is a chart I will come back to. This is one of the two main charts to watch right now, in my opinion. But again, I don't think the downside is over here. But we'll go over this in more detail in just a few minutes. The Russell 2000 is just a complete mess. You can see that since February, we've just been in this channel, and we're still there. Again, we are battling the 20-period moving average here. We did finish slightly above it. But again, based on what we've seen all year long from the Russell, that is not a reason to get overly excited. I mean, yes, it's a step in the right direction, but far from being able to say that we are out of this range and onwards and upwards from there. Too early to tell. If we look at crude oil was up 85 cents on Friday. Now, crude is one thing to watch. One of the major hurdles here for the economy overall. Higher oil prices are putting pressure and increasing costs and that sort of thing. So they are becoming a bigger and bigger issue for this economy and market overall. So we'll have to continue to monitor this chart. But for now, it looks pretty bullish. Gold was up just $1.40 on Friday. Again, could this end up being a double bottom? It can. Way too early to tell, though. And right now, we have that downsloping 20 to contend with. So for now, we'll have to see if we can at least get above the 20 here sometime next week. If we look at the 10-year note yield, pulling back a little here near the end of the week. Finishing off the week at 1.465, down from where it was, roughly 1.56. So a decent pullback here. But again, still looks like we may be in for higher rates here in the near term. If we broaden the scope a little and we look at the charts of the main ETFs here, starting with energy. Again, oil prices moving higher. Energy ETF looking strong here. It looks like it wants to get back to about 57 here, the high. When we look at the financial sector, a glimmer of hope here, and this has a lot to do with rates, in my opinion. If rates go higher, banks and other financial stocks tend to do well. So we did move above that 20, come back to retest it. Was a good, healthy bounce on Friday. We need to see some follow through here, potentially taking us to new highs. If we look at technologies, again, we'll come back to the chart of the Nasdaq 100 where most of these techs are. But again, healthy day Friday. I do not believe the downtrend is over yet. When we look at consumer staples, not a good picture at all. You look at utilities, and yeah, we've hit support, but boy, oh boy, what a falling knife situation there. Healthcare, same thing, falling knife situation. And we look across the board here, as consumer discretionaries, again, not looking very positive. Real estate, not looking good at all. right? Industrials not looking good at all. And just across the board, right? You see that over and over. Materials, same thing. Communication, nice bounce, but that uptrend was over once we broke that trend line. And so now we have a lot of catching up to do. And retail, we're at the bottom end of this lengthy range. So really, aside from energy and financials, it's really not a very positive picture right now. So before we look at the news ahead, or actually, let me just take a look at the upcoming news items for the week, and then I'll go back to those two main charts that I want to focus on this week. So on Monday, we get factory orders and we get total vehicle sales. Those, in my opinion, are the most important. Actually, there's also the OPEC meeting that kicks off, so we'll have to pay attention to that. On Tuesday, we do get the trade balance. We get Red Book. We get ISM non-manufacturing number as well. Wednesday, we get the MBA mortgage apps number, and more importantly, the ADP non-farm payroll numbers, the private payroll numbers. We know they were very weak last month. Let's see what is on schedule here. The forecast is for 430,000. Remember, the previous one was 374, but the forecast then was much higher than 400,000. We also get crude oil inventories on Thursday, and we get a member of the FOMC committee speaking as well. Thursday, we get the jobless claims numbers like we do every week. We also get consumer credit. And Friday, we get the main employment report, which will be very important, along with wholesale trade, wholesale inventories, and the U.S. Baker Hughes rig count. So lots of news on tap. Two important employment reports coming up this week. It is the beginning of October, usually a weak time for the markets. We do see overall the trend not very positive. Now here are the two charts that I would look at. The Dow Jones Transports, all right, at a very important point. This was the line we drew last time, which were these lows here. And looking back here, we're looking for support in this area. Failed, briefly came back above, giving us a glimmer of hope. Failed at the 20, came back below. Now, Friday, we bounced again, and we're retesting that exact level. Now, in my opinion, we either, see this thing, clear the 20, and clear that recent high here, which will mean a double bottom is in near term and we're likely to go higher, or we fail and we break below this low and we drop much further. So that's what I'm watching on the transports. The reason I'm watching the transports is they usually lead the industrials, the Dow. So if this fails here, expect more downside on the Dow. Chart of the Dow not looking good at all right now anyway. So that's what I'm expecting. It could surprise us, and we could, again, break that high here, break the 20, break the high, and move on. I do expect, if you look at seasonality, September, October, parts of October, very weak, and then we get a strong rally into the end of the year. That could happen again this year. So we are looking for some reason to go along the market again here. And so we'll have to keep a close eye on this. The other one is the chart of the NASDAQ 100. Where if I go back here, and when you can use the Qs as well for this, but we're at a key level. We talked about this in our chats earlier this week, that if we cleared that level here, we're likely to come back to this level, which is about 14,000. Remember, that's the number I had mentioned on the Qs, right? That 14,000 is 340, right, in this area. And so if we break this area of support here, right, we're likely to go down to 340 on the Qs. And so again, we either hold and bounce and start to rally into the end of the year, or we fail and go much lower. And so those are the two charts that I think have the potential to lead the way either higher or lower right now. And those are the two, the Dow Jones Transports and the NASDAQ 100. That's what I'm keeping an eye on. But again, a lot of news coming up, a lot of things that can, either support this market or really take it apart. We still have the Evergrande issue out there. We don't know the full impact that's going to have. We have higher oil prices, inflation, all of these things out there. And this week, again, we get the employment numbers, which are going to be very important, along with many other economic data points. So, again, a reminder, tomorrow being Monday, October 4th, normally we would have a market chat at 1 p.m. Eastern. This week, we will not. I cannot make it tomorrow, but we will have a double session on Wednesday morning where we will incorporate our course of the month into our chat. So Wednesday morning, 10 a.m. Eastern is the next time we'll get together. Until then, enjoy the rest of your weekend and keep an eye on these charts early in the week, and we will see you on our next update.